All right, hey everyone, this is Jack and welcome to your free update. All right, so I just want to bring some things to your attention. Maybe you'll agree, maybe you'll disagree, but I think the point of this is just to kind of unpack the idea and just see how you feel about it later. All right, so we kind of have this choppy summer, hasn't been super great, right? We've just been kind of sitting here on the sidelines, waiting for the market to do something, and I think we're coming into that point. All right, so I'm going to tell you why I think so. So this is a weekly chart on gold. Pretty solid, correction here for the past, you could just say 6 months. Let's just call it that because we had our January highs way up there around 2000. And then what is the most significant thing about this chart? Well, it's actually this weekly squeeze that's firing. Yeah, that histogram down there doesn't look too good, and a lot of momentum to the downside. Still has some room to run down to the 1272 extension at 1680. Now, I don't think this is going to be worst case scenario, but at least that's my first downside target. It's kind of worrisome whenever you have a voodoo line down here at around 1630, 1640, when most people in the first place can't even believe we're back down to 1700. And so it perfectly makes sense to be a little cautious of this idea, but I just wanted to bring to your attention that there's a weekly micro squeeze on gold futures now with much more downside momentum than anything. And if you're curious about a daily gold squeeze, it already fired. So yes, we could probably chop around 1725, 1700 for the next week before another correction, sure. But I digress. Let's get into why I think being bullish next week makes the most sense. So there is a daily NASDAQ up here on the left-hand side. There's a squeeze. We have some tech earnings coming up. We have Tesla on Wednesday, but that's not really the most important part. The most important part is actually, it's kind of deceiving. It's not from the daily chart. I just wanted to let you know we've made higher lows and higher highs throughout June and mid-July, and now we're kind of at a crossing point where the 8 is crossing through the 21. The yellow line is crossing through the orange. And if this happens and we close and trade above it for 2 days more, that is very bullish on the squeeze and very bullish for the chart. Now, the cherry on the sundae here, let's divide these daily wicks in two on a 4-hour chart. Now, what is significant about this chart that you see? And feel free to look at the histogram. That's right. That's a 4-hour squeeze now trying to fire into the end of the week on a Friday for the NASDAQ. Again, the 4-hour chart is just the daily chart divided in half with double the bars, but it gives us good information because it's a squeeze that we couldn't see if you were just taking a look at the daily. So with all this so far, with gold correcting, the NASDAQ and S&Ps in general, the market kind of correcting here, what is a reason that we could believe that the market would stop selling off and maybe we'd see a little bit more strength for at least a week or two, right? That's as far as looking out as I possibly am or can be during a summer like this. But you can take a look at the dollar index and go, well, the dollar made a 3 ATR move in the past 2 weeks. And now, can it revert to the mean? Well, all things revert to the mean, and 106 would be, a start to that. I think 105, 105 half is more the reversion to the mean because we're really at 108. I mean, it's 107.98, but it is really 108. So a 3-point pullback in the dollar would very well be good for equities. And because it's up here at that second or third ATR, which is pretty high up there, if we're looking for a little bit of a correction in the dollar, maybe we'll have a little bit more strength in equities. We've already seen the correction or the rotation out of energy and the rotation out of financials. And I don't think there was that much of a devastating effect, or at least what I don't believe to be so. So I think that, holding some key levels for a little bit after a lot of selling throughout the most part of the first half of the summer, what if that stops? What if this is a little bit more of a structure play? And so we'll talk about being long on Monday. You can join me in the day trading room, and you can join me in the futures room. We'll be discussing options ideas and then futures trades on the intraday. So a lot of good stuff coming up. I know that we have some interest rate hikes coming up as well. So I think, the more we get into the later part of summer, hoping for a little bit more volatility, and we could see the start of that. I think we saw the start of it this week, and I think we're starting to make a new type of personality in the market, which would be great. So we'll see. But yeah, join me on Monday. We'll talk about all this and all the other things with commodities. And have a restful weekend. We'll see you in the next one. Take care. Thanks for watching this video. If you've enjoyed the video, be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. Good trading, and we'll see you in the next video.